Most investors think defense stocks only move when wars break out, but markets usually move long before that, when geography quietly changes. Greenland isn't in the headlines because of politics. It's because its location changes missile defense, satellite coverage, and national security priorities. And when geography matters, defense budgets follow. In this video, I'll break down why the aerospace and defense sectors are back in focus for 2026 and how a risk-aware investor can identify which parts of the sector will benefit the most and where the real risk still sits. And I'll give you 6 stocks to consider for your watch list so that you as a smart investor can potentially profit from these geopolitical moves. Also, this is part 2 of an 8-part series where I'll cover different sectors and specific stocks within those sectors who are positioned to win in this very uncertain macroeconomic environment. So there's much more to come. Please watch this space. Welcome back to Wages to Wealth. I'm Hitender, and by day I work in credit risk at a major retail bank. My job is to think about what can go wrong and make sure there's enough protection when it does. That same mindset shapes how I invest my own money. Not predictions, not hype, but understanding how macro risks quietly change the odds in my favor. So let's start with the macroeconomic setup and why the aerospace and defense sector is positioned to win. In early 2026, geopolitics didn't just get louder, it got more geographic. US involvement in Venezuela, rising Arctic tension, and renewed focus on Greenland all point to the same underlying shift. National security is no longer just about borders, it's about positioning. Greenland isn't important because of politics alone, it's important because of where it sits. That single location reshapes missile early warning systems, Arctic and North Atlantic surveillance, and satellite coverage and space-based communications. And here's the key macro insights investors often miss. When geography changes the risk map, defense spending doesn't get debated. It gets locked in and it actually increases by a great margin. This isn't short-term conflict spending. This is a multi-year policy-driven capital allocation. Governments are prioritizing missile defense and radar systems, space-based intelligence and communications, unmanned lower-cost defense platforms, and resilient aerospace supply chain. And once defense budgets shift from reactive for being preventative, spending becomes longer duration, less cyclical, and very hard to reverse. That's why aerospace and defense sectors are back in focus for 2026. The opportunity for investors isn't to buy defense broadly. It's understanding which parts of the sector benefit the most and where execution, funding, or even valuation risk still matters. So let's look at 6 names through a risk-aware lens and why these deserve a spot on your watch list. The first one is Kratos Defense and Security Solutions, ticker symbol KTOS. What's good about this company? Kratos focuses on unmanned systems and tactical tech aligned with modern, cost-effective defense priorities. It has returned almost 200% over the past 12 months, and the consensus analyst targets are higher than the current market price of $103 at the time of this recording. The key risk here is the fact that revenue can be lumpy and dependent on winning specific defense contracts, so something for you to keep in mind. The second one is Lockheed Martin, ticker symbol LMT. This is a giant. It benefits from long-term government contracts and deep integration into US defense infrastructure. It has returned almost 27% over the past 12 months, and even though the consensus analyst targets are slightly lower than the current market price of around $630, Lockheed is a preferred partner for the US Department of Defense and is positioned to win in this environment. In terms of the key risk, the growth is steady but slower, and budget negotiations can temporarily pressure sentiment, so keep that in mind. The third one is RTX Corp, ticker symbol RTX. RTX combines defense systems with aerospace exposure, offering good diversified cash flows. It has returned almost 55% over the past 12 months, and like LMT, even though the consensus analyst targets are slightly lower than the current market price of around $200, RTX is another partner for the US Department of Defense and is positioned to win in this environment, especially in light of their very strong 2025 revenue growth and their strong 2026 guidance. In terms of key risk, commercial aviation exposure introduces cyclical risk alongside defense stability, so something for you to keep in mind. Now the next three names have one thing in common. They are high risk and potentially high return plays, so position sizing will matter a lot. Please don't go all in at once. The fourth one is Rocket Labs, ticker symbol RKLB. I love this one. What's good about this company? Rocket Labs provides small satellite launch capability critical for defense and communications. It has returned almost 164% over the past 12 months and is one of the most popular names in the market with excellent execution by management. They have a 100% track record for launches and is considered a very good competitor for SpaceX. As a side note, SpaceX IPO is one of the most awaited events in 2026. So this is an exciting space to watch. In terms of key risk here, execution risk remains high and profitability depends on sustained launch successes. So this is a high risk and potentially high reward player. Fifth on the list is AST Space Mobile, ticker symbol ASTS. I love this one as well. ASTS targets direct-to-device satellite connectivity, a potentially disruptive defense and telecommunication capability. It has returned almost 450% over the past 12 months. Yes, you heard that right, 450%. And this again is one of the most popular names in the market, with many analysts being extremely bullish for this company. And in my personal view, Trump's Golden Dome policy will benefit AST massively. So this is a very good stock to keep an eye on. Some of the key risk is the fact that technology and capital requirements are significant with timelines still uncertain. So as mentioned before, this is a high risk and potentially high reward play. So position sizing is very important. Please don't go all in at once. The last one, number 6, is Ondas Holding, ticker symbol ONDS. Ondas provides secure industrial wireless network and autonomous drone platforms used in defense, critical infrastructure and surveillance, areas seeing rising government and security spending. It has returned almost 410% over the past 12 months. That's massive returns, and this again is one of the most popular names in the market, with many analysts being extremely bullish about this company. The consensus price targets here is around $19, which is a potential upside of 83% from current market prices. In terms of the key risk, the business is still early stage, with profitability dependent on scaling deployments and sustained government adoption. So this is a high risk and potentially high reward play. So position sizing again is very important here. Defense stocks often look boring until defense budgets expand. And as I've shown you, some of these stocks have moved significantly higher with potential to grow even further. But defense hardware doesn't work without materials. Missiles, satellites, batteries, all of it depends on inputs. In the next episode, we'll look at critical minerals and rare earths, the invisible choke point of the 2026 investment cycle and a key focus point for the Trump administration. And I'll give you some very important and interesting stocks to consider for your portfolio. If you've liked this video, please subscribe to the Wages to Wealth channel and turn on notifications so that you're kept updated when we release new insights. And also drop a comment stating whether any of these stocks mentioned today are already on your watch list. I'll be very interested to know that. I'm Hitender, and let's turn those wages into wealth. Thanks a lot for listening. See you in the next one.